Welcome to AHA Math and Science. Well, before I get started, first I'd like to thank everyone who has been watching our channel, and your support really kind of means a lot to me and give me the motivation to continue making videos like this one. So thank you so much. Well, the market had some really nice rallies recently, and some analysts on the Wall Street are kind of celebrating the beginning of a new bull market. However, legendary investor Jeremy Grantham disagrees. In fact, in a recent interview with CNN on Thursday, for April 13th, he said, other things will break, and who knows what they will be. And he also cautioned that the best we can hope for is actually a drop of 27% from current levels. Indeed, I kind of take his words seriously, and I think that what really kind of moves the market are usually those things that are kind of unexpected. So with that said, let's actually take a look at how the market did over the week. So one thing that we noticed that is on Friday, all the major indexes are kind of in the red, and they were down about less than 1%. And for the week, all indexes are kind of up, with Russell kind of went up by 1.5%. But what's really kind of surprising is actually the VIX was also down on Friday. So this is kind of really rare when all major indices and the VIX were down on the same day. It happened less than 1% of the trading times. So what does that mean? Well, if in a bull market, usually it means kind of further upside room, for the markets. But in a bear market, actually, the meaning of this signal is kind of mixed. In fact, when the VIX drop a lot and the index drop like a modest amount, in some instances it could mean that in the short term maybe there's a little bit more upside for the index, but actually in the intermediate term, it could mean like more weakness for the market. So let's actually get started. Take a look at first SP 500. We use SPY, the ETF for SP 500 as a proxy. So for the week, SPY went up by $3 from 409 to 412. And you can clearly see that it's still kind of in this downward trend, despite that it was kind of up for the past few months. And currently, it's still above the 200-day moving average. By the way, this is the daily chart. But you can see that actually over the past 10 months also, it was kind of stuck in this trending range. It's leading on kind of made a lot of progress in terms of going up. In fact, it has not even kind of break the August 2022 high yet. So this kind of slow kind of trending upward is much clearer if you look at the weekly chart. So it's not really kind of make much progress in terms of the higher high that it's making. So it's more like a topping process, which could be a worrisome sign. This downward trend is also very clear when we actually plot it on a log scale. So when we plot it on log scale and we do a statistical analysis, drawing a trend, we find that the SPY kind of was kind of stuck in this trending range, which is bounded by the 2 standard deviation above and a 2 standard deviation below the trend line. This is the downward trend line. Now it looks like it's getting very close to the 2 sigma trend line. So we suspect it's possible that it could touch or even just kind of move slightly above it. So that will put our SPY target around 420-ish, which is like for the SP 500 index is around 4,200, so which is about like 2% of upside room from the current level. And we suspect this is going to be basically a turning point for the SPY to resume a downward trend. Now, as we kind of point out, both the major index and also the VIX was down on Friday. In fact, if you look at plot the VIX against the SPY, you can see that the VIX was kind of, the volatility index was kind of in this downward trend since October 2022. And in fact, it made a fresh low or closed at 17.07 on Friday. So it's not kind of getting close to the level, the low that it made, which is like 16.60 on January 3rd of 2022, which corresponds to the top of the market where the bear market kind of started. So from the signal, you can see maybe in the short term, there's still a little bit upside room because the VIX just made a fresh low for the major index code to go up a little bit. But it doesn't really mean like everything is all clear. In fact, if you look at history, a pattern like this usually kind of suggests more kind of downside room for the index in the intermediate term. So for example, in 2008, during the great financial crisis, the VIX was kind of in a downtrend since March of 2008. And in fact, it made a low of close at 16.30 in the middle of May 2008. And then it was really kind of very close to the low of 16.12 the VIX made on October 9, 2007, which correspond again the top of the market. So it's very close, but it does not really kind of break it. And then you can see what happened next. It just kind of started, the VIX started kind of turn around and it went up, which correspond to a top of the market. And then very soon, the market has some precipitous drop afterwards. And you can see that also that during that time, 2008, the SPY was also in a downward trend. This is kind of probably from July 2007, which is like 3 months before the market topped. And it was in this downward trend. And when this is like a kind of a relief rally, during the bear market, you can see also the SPY went above the 2 sigma, the +2 sigma trend line. But then just briefly went above it and then kind of turn around, start drop. And in fact, eventually the drop is so ugly and precipitous, it actually the index kind of went outside this trend line. And this is kind of the final leg of drop during the great financial crisis. So the VIX is actually a very important signal we'll be watching to see if actually start to kind of turn around and then kind of start went back up again. So the next one we're going to look at is the other two major indices, which is QQQ, correspond to the Nasdaq 100 index or the larger cap technology companies, and then IWM, which is ETF for the Russell 2000, which is the 2000 small cap companies. You can see there's a clear divergence kind of developed. So QQQ was able to make a new high, even higher than the February high. But the IWM is kind of telling us a different story. You can see it's further down than the February high. Not only it was not able to make a new high, it's actually showing a lot of weakening. It's in this downward trend. So it's actually 10% lower than actually the February high. So this kind of divergence usually kind of result by either, if in a bull market, the weak index also make a new high. But in a bear market, usually what happens is the strong index also make a new low. And therefore both eventually kind of in a downward trend. And you can see that exactly the same thing happened at the end of 2021. The QQQ, it was showing a lot of strength in the 3 months before the bear market started. But the IWM is already showing weakness. And there's a huge divergence here. And how did it resolve? It resolved by the QQ also went down, eventually made a new low. And that's how actually kind of divergence get resolved in a bear market. So we are, this divergence really does not kind of bode well for the broad market. Because if in a bull market, then the indexes should all kind of track each other. They're both going to make a new highs. This is kind of based on the Dow theory. So that's not happening now. That's a worrisome sign. Lastly, let's take a look at the dollar index. You can see probably here, the black curve is the dollar index against the blue curve, which is SP 500. In the past year, also, you can clearly see this reverse correlation between the two. For example, when the dollar index is kind of going up, SP 500 is going down, and dollar index going down, SP 500 is going up. Dollar index is going up, SP 500 is going down. And recently, dollar index is going down, and SP 500 is going up. So there's very clear inverse correlation between the two. And you can see that just kind of on Thursday, the dollar index made a low of 101, closed at 101.01, which is even lower than the February 1st low of 101.22. So what does that mean? Well, it could mean that things just like dollar index just made a new low. There could be still a little bit further downside room for the dollar index, which could mean like a slightly further upside room for the SP 500. But when you look at the MACD signal, you can clearly see that it seems something is changing. You can see the MACD signal kind of start to trend upward when above the signal line, and the histogram seems to start kind of turning, which really kind of looks very similar to around December 1st of 2022, when actually the market turned around. So this is again another signal we'll be watching to see what happens next to the dollar index. So yeah, there's a lot of information kind of suggesting some weakness in some strengths maybe on the short term, but then we'll be watching and we'll be very kind of careful about perhaps kind of a new round of drop might be kind of on the horizon in the intermediate term. So I hope you have enjoyed this video and find the information present here kind of interesting. Again, your support really kind of means a lot for this channel. So please do not forget to click the like button and also subscribe to our channel. And thank you for watching.